A very good morning to all the students and our respected guests for today, our beloved Vice President, sir, speakers for the day, Kunal, Lokesh, and the Chairman, sir, for SSCB, Sushil Goyal, sir, and all the SSCB team members. A wonderful and a prosperous new year to all of you. So, in spite of being the 1st January, sir, we are having the 35th continuous live webinar, a weekly webinar conducted as per the decision taken by the council that we need to have not only the theoretical, practical knowledge, but students should have a tech-savvy and a webinar-based knowledge. So with that aspects, covering all the topics like income tax, GST, Excel, audit tools, and today covering the bank audit on the concurrent audit, SSCB board is being conducting the 35th live webinar, and the participation of the students is superb. A week on week, in spite of the festival day, in spite of the holidays, every week it was continuous, and it is all because of the students' encouragement and participation. And thanks to all the faculties who are being a part of it. So today is a wonderful day to start with, being a new year, a new approach. And if at all I have to tell about, we need to know about an economy. We should have the knowledge of the banking system. So concurrent audit at a transaction level is the best area where students can really gain the knowledge about the economy and the corporate, the way it is operating, the critical factors that is taking place. And this knowledge will really take it a long way to all the students. So really thank you for all, in spite of being the new year, we know your traveling schedule and hectic. You took out a time that shows the love for the student. Because student, let me share, whenever any matter comes for a student, people always say that it should be much beyond. So that is one statement I would like to say. So I thank you, sir, for being a part of it. And all the students would love to listen to you. Over to you, sir.
Thank you very much, Sridharji. And let me begin by wishing all the participants, Sushil Goyalji, the Honorable Chairperson of the Student Skill Enrichment Board, the very dynamic Vice Chairperson who has started the day, the 1st of January, with the students, and that shows his love, dedication, and commitment for the student, Sridhar Mopalaji. The two very learned speakers who are going to speak today, my dear friend Kuntal Bhai from Ahmedabad and Lokesh ji, and of course all my dear student friends who are participating in this webinar. Wish you a very, very happy new year. May you have a fantastic 2023. All your dreams, aspirations, they come true. And more importantly, you're able to bring glory and pride to your family first, and then to the profession, and finally, most importantly, to the nation. So my best wishes to all of you as you begin this new year. Very rightly exclaimed by the Honorable Vice Chairman of Student Skill Enrichment Board, who all of you would have seen is very active in terms of organizing various initiatives to enrich the skill sets of our students. It may be the residential course for students that is happening in terms of the GMCS for 28 days in various locations on residential basis. It can be these seminars which the SSCB has been curating in the entire year. And let me here just tell my dear student friends that the importance which the council felt was that you may be doing articleship in firms of different sizes, in firms which may have different practice focus areas. And therefore, some students feel that we are not able to get the right kind of knowledge mix, practical exposure of all the areas. So, for example, you may be in a firm which does not have concurrent audits or is not a concurrent auditor of any bank. So this session today is specifically designed for all those friends who have friends who they meet during maybe pursuing their chartered accountancy, studying for CA final, who say, oh, I learned this in concurrent audit. And they feel, oh, I missed out. I did not get the exposure of going to a bank, looking to the banking CBS or ERP environment and other areas. I think these sessions, and specifically today's session, is designed for all of you, A, who have not got this opportunity, and B, who are already working in firms which have concurrent audit, to improve your skills and deliver better audits for your principal and your firm. So I think a very important initiative that the SSCB is taking, and all the areas that Mupala Sridharji spoke about, may it be direct tax, indirect tax, corporate law, filings, and banking, all of them are being taught to you. So I would urge all the student friends, if you're hearing live, excellent. If not, please go through the recorded sessions that have been held for the 35 different sessions that SSCB has organized, and try to upgrade and hone your skills, because that will truly hold you in good earnest when you are going into practice or are going into industry and applying for maybe the top corporate jobs. Having said that, let me also say that 2023 is going to be a very important year for all of you. As you are aware, the Institute very openly, transparently has done the entire process of the CRET, which is the revision of education and training. We reached out to all. We received almost 25,000 responses, which the council discussed and deliberated. And now the revised course curriculum has been sent to the government for approval. Why I'm mentioning this is because in 2023, in all likelihood, we are expecting the honorable government will give us the approval for this, and we will be able to at some point launch the new course curriculum. My request to all my student friends is, please, I know there will be anxiety that what will happen to me if I have cleared one course, I have exemption in one subject. You may have various doubts. It is not just these questions, there will be hundreds of questions in your mind. Be rest assured, the Board of Studies, both academic as well as the Student Skill Enrichment Board, that is the BOS operations, will try and address all the issues of all of you. Please do not at this moment try to run ahead of the car or the bus or the train and think what will happen next. It is a process. The entire discussions have happened. We are waiting for the honorable government's approval. Once we have it, there'll be huge, I'm sure, outreach programs which we will again do to solve all your problems. And I will request Sushilji and Mopalaji at that time also that they reach out to all the students so that all your anxiety can be cleared. But I will only say that yes, 2023 is going to be a great year for you in terms of improving your academic learning, taking this new course, having better skill sets. And we will also try to improve the GMCS, ITT and other trainings that are provided to you so that our chartered accountant, the future chartered accountants are ready not just to face Indian market, but to serve and be the best accountants in the global economic environment. With these words, let me once again compliment the SSCB for organizing this very important session. And special thanks to both Sushilji and Mopalaji for giving me this opportunity to start my new year, not with members, but with students, which I truly believe are a very important, rather more important constituent of our institute. We are 300,000, 350,000 members, but we are 800,000 or 8 lakh students. So you are not just more in number, but you are also more important to all of us because you have a special place in our heart. With these words, I compliment SSCB, thank the two speakers for sparing their time on this 1st of January, and wish all my dear student friends all the very best in your pursuit of professional course and also ensuring that you are world-class professionals. Thank you very much.
Thank you, sir. Thanks for such wonderful words. As you rightly said, now it's an opportunity for the student not only to be a good accountant within the country, but our students can really play a very, very vital role in the global scenario because as we know, G20, we have taken over the leadership. So it's the right time for the students also to think from the international perspective. And surely SSCB will also conduct such activities to make sure that every students get the awareness about the global opportunities. And thank you once again, sir, for all the New Year wishes and your greetings. So now I request Office to kindly introduce the speakers for the day and let's take the session forward.
Good morning, everybody. Thank you, Mopalaji. Thank you, sir. Thank you, everybody, for starting the session. So today our session speakers are Mr. Lokesh Gupta ji and CA Kuntal Shah ji. About Lokesh Gupta ji, he is a chartered accountant and he has done his LLB from Delhi University. He is also DISA qualified and done forensic audit and fraud detection. At present, he is the partner in Sharpen S company and he has conducted various bank branch statutory audit, concurrent audit, stock audit and internal audit. He has having a vast experience in the specialized units regarding to currency chess. So thank you, Lokesh ji, for joining. And with regard to Kuntal ji also, he is a chartered accountant. He is a Bachelor of Commerce from Gujarat University and a fellow member of Institute of Chartered Accountants of India. He has done A+ grading diploma in CDAC. So he's a practicing chartered accountant since 2007 and currently he's practicing in the fields of audit, income tax, GST, FEMA and company law. Over to you, Kuntal ji. Thank you for joining both the speakers. Thank you for sparing your valuable time and Happy New Year to all.
Thank you, Jimmy. It is indeed a pleasure to join the session, and that too on the 1st of January. I wish everyone Happy New Year, and it will be. I'll say that there won't be any problems in 2023 that we are facing since last 2-3 years. And we'll come out with the flying colors, we, including our families, ourselves, professional as well as country. Today, the seminar that is structured in a way that I'll be starting with a few of my opening remarks, and Lokesh ji will be dealing in detail on a technical side as well. There is a personal difficulty on my side because of some emergency, so I have to rush to that. But I'll ensure that I'll at least start off with important aspects, and thereafter the same can be elaborated, and the same will be done by Lokesh, my dear friend Lokesh from Delhi. So without wasting much of a time, let's start with, I have a very small presentation. I'll start with that one, and thereafter I'll hand it over to Lokesh. Yeah, so what is concurrent audit? That is what is very important to understand, because in normal parlance or in a normal scenario, what we generally do, or what we do with the other set of clients other than the banking, is internal audit or a statutory audit. In particular, in the banking sector, you find a lot of time that the concurrent audit is also one of the audit, apart from internal as well as statutory audit. Concurrent audit is actually an examination which is a contemporaneous with the occurrence of transaction. See, what happens is this, that you have a transaction that got recorded in a particular day. Now, internal audit generally happens once in a year or twice in a year, depending upon the risk perception or risk category of that branch. Statutory audit again happens once in a year, but it is having a different set of review mechanism, as well as certain goals are differently set up into statutory audit. The problem that arose is like this way, that when internal audit comes up or a statutory audit comes up, after a considerable time that is elapsed from the transaction that got recorded. So let's say transaction got recorded on the 1st of January. The internal audit, in case the concurrent audit is not there and internal audit is happening on a year-on-year basis, the last internal audit, let's say, concluded in November. The next audit will come in the next November or a December cycle. So the transaction which got recorded in January will be audited at the time of November. Now, at that point of time, there are a lot of issues with respect to, let's say, some fraud has happened or some error was committed at the branch side. It will go undetected. And that will create a lot of problem in terms of compliance as well as the cost to the bank. So this is the concept that was introduced in early 90s by Reserve Bank of India. You can say that it's an aftermath of Harshad Mehta's scam. And probably from that time point of time onwards, this system is in place in all the banks. It's an excellent opportunity as well when you all become a chartered accountant for a service offering. I would see this not only from a service offering perspective, and probably this my small discussion is about harnessing some skill sets, and what you learn through this audit will be very useful when you go and you offer your services to your clients. I'll explain you. Lokesh will be taking it in detail. However, I would also suggest the board of studies that you can have few of the topics, specifically few of the topic that can itself work for at least 4 to 5 hours. So that actually is useful to hone our skill sets. Right. So we'll be discussing that part as well. So we were on the concurrent audit is an examination which is contemporaneous with the occurrence of transaction, or it is carried out as near that to as possible. It attempts to shorten the interval between transaction and its examination by an independent person. Concurrent, what is the aim of concurrent audit is to shortening the interval. That is very important. And independent examination. Now, in few of the banks, they do have concurrent audit system, but that is done by the ex-employees of the bank. But on-the-job employee cannot carry out the concurrent audit, and generally the banks would give this assignment to the chartered accountants. Now, what are the important aspects in concurrent audit? I have not included all. I have included only few, where as a student as well as a member, we should be very particular about understanding all these aspects. The new changes that are happening into this particular things, and what the RBI is proposing into this one. The very important one and the first one is the KYC and an AML. Know your customer and anti-money laundering. There is a serious threat on the banking system that is being misused by the money launderers as well as the terrorism financing. Now, across the world, there is a very strict implementation of certain guidelines wherein such kind of scrupulous person should not get an access to banking system. Channels or new product offerings or new set of technology issues that would be there. In that context, what we need to do is that we need to understand KYC and AML in depth. Then comes in the banking side, cash management, handling of cash at the branch as well as through the currency chest, deposit and remittances, loans and advances. Very important aspect because that's the revenue generating asset. And that's where we need to be focusing more on to, and that is very important to understand various products on the loans and advances. Then comes the IRAC, income recognition and asset classification. You would have heard the term NPA, non-performing assets, right? This is where it comes from. That is from IRAC. Then comes foreign exchange and trade transaction. Now with the globalization and India now poised for opening of various different set of trade transaction, including that into rupee trade transactions with various countries independently. Now it is time for India to go a step further, and into that the banking will be at the heart. And since you would be dealing into this either as a consultant for the bank or an auditor for the bank or consultant to your client, you need to understand what is foreign exchange and trade transaction. This is subject by itself. And if we learn this, or if we can hone our skills into this foreign exchange and trade, it's an excellent opportunity for us to either even in practice or in when we are in the industry as a job, undergoing a job. Then comes the core banking software. You all would be working with a software called Tally. You all will be masters of Tally now. A lot of people are now using QuickBooks, Zoho. A lot of other companies have also come in now. So in that sense, the banks, the software that the banks are using is known as core banking software, though there are various software providers available, that is Infosys, TCS, Oracle, right? These are few dominant players in the banking software. So if we would like to audit anything, now gone are the days that we'll be auditing through the document trails, or we'll be seeking document for all transactions. So what we need to now do is that we need to understand, we need to we need to be proficient enough in working with the core banking softwares. Now there are various good publications of our institute only, which gives an excellent set of information about all these aspects. I included those 3 of those publications at the end of my presentation. You can make a note of that one. You can take a screenshot of that one, or you can even go to the website of the institute and you can download this for free. Please read that. It will be very useful for everyone. The last point that is important is the banking fraud. But why I kept it at last? Because once you go through all these aspects, once you are proficient enough in all these aspects, you will be in a position to understand frauds in a much better way. Immediately starting with fraud. See, again, fraud is having an immediate impact. But that does not mean that it is to be started with first. We need to understand the nitty-gritty of these all transactions and softwares. Once we are through with that, then only we can move and we can verify or we can identify certain transaction as a potential fraud or actual fraud. Right? Okay. So what we need to do is we need to sharpen our skill sets that's the time to sharpen the skills. You need to have as much as skills available. You will be chartered accountant in a year's time or 2 years time, right? However, it's not only that you are qualified a chartered accountant, also have the skill sets. Now, this is only on a banking side. In terms of other industry, I would say that you can sharpen your skill on the insurance business, that is on a general insurance or in a life insurance. Then there are tax matters. Then there are, let's say, electricity generation companies. Now you have multiple set of hydro, the solar systems. Then there are other conventional method as well. You can have in oil and gas. It's an excellent. Now there is a university as well. So what I am saying is, don't stop yourself as once you become a chartered accountant. Go beyond that, sharpen your skills, and you will find different set of work that you will be getting into. Then comes the stock markets, or even you will be surprised to know that there is a university at our place, that is at Gandhinagar, which is known as Petroleum University, and which deals with the futures and the forwards and the option contracts in petroleum products. So it not only teaches you on the different technical aspect of this, as well as it teaches on the finance side as well. So let's say if you happen to be working with some company where it is working in an oil and gas, or now even the next generation is of an hydrogen cell business. So that way, if your skill sets are improved, you can get better opportunity in those companies, right? In terms of banking, you need to have your skills pretty much sharpened on KYC and AML. Advanced is an IREC, foreign exchange and trade, and CBS and its implementation. The Reserve Bank of India expects that each and every aspect of the bank, and now from 2025 is the last deadline for even NBFCs as well, to implement a system known as CFSS, which is similar to CBS. So now you see the horizon that is available. You will have a private bank, you have public sector bank, you have cooperative banks, you will now have an NBFC also having this kind of systems. So if you sharpen your skill into this one, there is ample opportunity available. Right. The last and important one, since you all are future chartered accountants, I will always say that please have specific mindset with respect to maintenance of documents, review checklist, and working papers. It's very important. Many of the times we tend to invest more time only into the execution part of a work, but we invest very less time in documenting what we have executed. Please prepare your own checklist, your own set of document requirements, prepare in a file in a very structured manner, and you can very well show it to your senior as well. Sir, I have already prepared this one. If you find that where I am lacking in certain aspects, do inform me. I'll update that. See, that's how you can sharpen your this kind of thing. Once you are chartered accountant, you will be training other students. So you will be imparting that good knowledge to other students as well. So please have set of review checklist and the working paper maintenance, and you can prepare your own set of this thing. Now, this is what the publication that I was referring to. You can take a screenshot. You can note down as well. This is a guidance note. That's an annual exercise that is carried out by institute. It is on a statutory audit of bank. So you can refer that. It's an excellent book as well. It comes with a lot of material, ready formats as well, available online as well as through the, you can purchase it through the bookstore of ICI or an online bookstore. Then comes specifically for this one is a manual on a concurrent audit of bank published by IASB or ICI. So that gives you an idea about the course or the topic that we are dealing right now. It contains a lot of things in a detailed manner because statutory audit has a different scope and different review mechanism. Whereas in concurrent audit, it is a different, though it is of a same set of branch setup or a bank, it's a different review mechanism or a review perception. And then comes if you are very much inclined into the banking frauds, or I would say that what the Reserve Bank of India has stated, earliest warning signals for frauds in banking sector, published by DAB of ICAI. It contains detailed commentary on each of the early warning signal EWS mentioned by Reserve Bank of India in Master Circular, Master Direction for on fraud, that what are the possibilities or what you should be looking into. It's a very small publication. I won't say that it's a 600, 800 page publication. It's a very small one, but it will give you an excellent insight about how fraud happens and how you can catch hold the fraud, or at least can sense the fraud. Right. So these are the three publications that I would like you to go through. And this is what wanted to share. I would thank everyone. Extremely sorry because of some emergency. I had to rush now, but Lokesh will take in detail about all this thing. And over to you, Lokesh.
Thank you, Kuntal. Aniket ji in absence here, Sridhar ji, Sushil ji, and my good friend Kuntal ji, who spoke, who gave you a broad overview of the concurrent audit in a bank. Of course, what he said, I would second by saying that concurrent audit has been a great tool in the hands of the banks in ensuring a concurrent verification of the transaction, because the bank are dealing with public money. So the risk at the banks are the highest. And when we Kuntal spoke about frauds, if we look at the stats of frauds in the Indian banking system, you will realize that the maximum frauds are happening in the banking industry. So that is where the banks are more concerned and they are more stringent, and they require a concurrent help that a daily basis transaction checking happens on a more timely fashion. So any internal audit mechanism or a statutory audit mechanism would actually happen once a year. So there would be a time lag between a transaction happening and a transaction being detected, a transaction being checked, and would also give an opportunity to some fraudster who may be involved, who may be an insider in a bank, that he is already aware that maybe an internal audit has happened now. So it is not likely to happen in the next 9 to 10 months. So he has got a lot of time lag in between wherein he can actually complete a fraud, where actually this concurrent audit mechanism can really help the banks in actually doing a concurrent audit verification in a timely fashion. Wherever the transactions happen, it is verified in a day or so. And then, of course, it would get reported, and any action where any corrective action is required from the bank, it can be taken in a timely fashion. So, of course, a very, very important tool in the hands of the management also. Now, of course, when it comes to concurrent audit, I've seen a lot of times people actually getting concerned actually exactly as to what needs to be done, because there are a lot of things which we can do actually. And I can tell you a lot of things. I was a student like you once, and I was sent to a concurrent audit for a Forex branch, I remember. So the first day it was very different. The environment was different. The way they were working was different, and the way we normally do an audit for a business organization, the audit was very different. One, it is an internal audit, so the expectations are different from the management side, and secondly, the expectations and the work which you have to do is different. But also because the environment in which the bank operates is quite different to what we see in a normal business community. So I was perplexed. I was challenged by the fact that we are in a very, very different environment. Of course, every challenge means that we can actually get up, decide to learn, decide to improve ourselves. And this is how we can actually become better at the work we do. And I can tell you, when we do concurrent audit, we actually understand a lot of things about banking, of course, and a lot of things about various other things which are very, very relevant when it comes to a business organization, like credit assessment. This may be relevant for a banking company, But if you are there in a business organization, there also it becomes very, very relevant, because the business would be looking at getting a credit from a bank. There, how much credit they can get, how can they improve their credit score, how much, and what bank would be looking at becomes very critical. So these kind of things very similarly like Forex also. Now, Forex is something which is very, very important in a banking company. So if you have a good knowledge about Forex, then of course you are really valued. Then in a business organization now, because a lot of businesses now are going global, they need somebody who understands Forex, who understands the rules and regulations which are applicable to Forex, who understand how a bank could perceive a document, and what procedures are required to be followed for completing a Forex transaction. So all these knowledge, once you do a concurrent audit of a bank, you gain, and that is very important for you as a concurrent auditor or as an auditor to a bank also, and would also be very, very useful for you when we go and audit a business organization, or when we become a part of a business organization. So it is very important that we don't visualize concurrent audit only as a tool for doing audit for a bank. It is a very, very important tool for not doing learning the understanding we get, the knowledge we get from doing a concurrent audit would really be very helpful for any student while he look at the advancement of his career after becoming a chartered accountant. So just to elaborate, if we look at concurrent audit of a bank, then the first thing we look at, what is the expectation of the bank management from us? Then what is the scope of concurrent audit? My friend Kuntal spoke about the scope, the broad areas under which the concurrent audit needs to cover. Then what is the planning which we need to do? So as a student, maybe the planning part is being taken care of by your principal. But of course, we need to understand what is the planning. Then specific areas we'll discuss. Then what are the working papers? That it becomes very important. Of course, your principal would be able to guide you on how to maintain that working papers. But the working papers are very important for us to basically prove that we have done a good job. So while we do a good job, it is very important for us to also be able to prove to somebody if they ask that we have done the job, how we have performed the job, what samples we have taken. Because in case of banking company audits, we need to understand that it is very difficult for any concurrent auditor, virtually impossible for him to do 100% verification. So he has to cover the high risk areas. Basically, the risk prone areas he needs to cover in more detail, and the lesser areas which might not have that much impact on the bank, they might do on a sampling basis. So that these working papers would actually tell you later on that what areas we covered, how much samples we took, what were the observation, how we handled those observations. Okay, then effective reporting becomes very, very critical. Of course, again, as a student, you are somehow managed, the reporting part would be somehow managed or overseen by your principal. But we need to understand how an effective report can be prepared, and which is very important, because ultimately, whatever work we have done, unless until it is effectively and correctly portrayed to the management, the purpose is not solved. So if we have done a good job, but it is not shown in the right way, it is not correctly reported to the management, not effectively in a proper format reported to the management, the usefulness of that work which we have done is lost actually. So we'll discuss about that also. Okay. Now, of course, we discussed that the bank actually look at the concurrent auditors for the purpose of ensuring that the transactions are verified on a very regular basis, and any transaction which requires the immediate management attention is brought to the attention of the management without wasting any time. Now, what is the scope? So generally, our concurrent appointment letter would basically define the scope. Then there are RBI pronouncement to that effect. RBI would basically determine what kind of activities they want to be covered by the concurrent auditors. So that in any case, the bank has to cover. Okay. Then our ICAI regulations would also guide us as to what kind of activities we need to perform for a concurrent audit. And then, of course, whether our scope is limited to that, no. So anything which affects the bank, we can actually cover in our audit. Okay, so to that extent, the scope is very wide. Okay, now there is a RBI announcement to that effect, September 18, 2019, which basically talks about how much branch banking needs to be covered by concurrent audit, and whether it can be done by the internal staff also, or it can be only done by external people like us. So it basically says that the concurrent audit should be done by bank's own staff or external auditors, and bank host staff also include retired staff of the bank. So it is then they left to the discretion of the individual bank as to how they want to operate the concurrent audit mechanism. Okay. Then of course they also said that a concurrent auditor cannot continue the same branch for more than 3 years, and any concurrent auditor would have to can continue only for 5 years in a bank, and then he will be subject to a compulsory rest period, which the bank would decide. So 3 years maximum at one branch. Then, of course, the bank can decide to change the branch, and maximum 5 years. Thereafter, there is a compulsory period of rest. Okay, so this is important. Then they said that a structured reporting format is to be provided to the auditors, and minor irregularities to be rectified on spot. So that is important. So if there are minor issues, the concurrent auditor should try and approach the local management, the branch management itself, to rectify the issues immediately. Then major deficiencies, of course, needs to be brought to the notice of the senior management, so that any corrective action which is required can be taken care of. Then quarterly review becomes important. Fraudulent transactions, of course, if there is an intention to defraud the bank, then it becomes a very serious matter. Then it also needs to be reported to the senior management. Then follow-up action, rectification of deficiencies to be given top priority. So of course, if we point out an error as a concurrent auditor, and ultimately nobody looks at it, nobody rectifies those errors, then the purpose itself is lost. So please understand that it becomes very, very critical for any concurrent audit mechanism that whatever issues the concurrent auditor has pointed out, somebody is looking at those issues, getting those rectified, and in case it is a repetitive issue, that it is happening on a very regular basis, then of course action needs to be taken in terms of the staff training maybe, or action against the staff if it is so required, or whatever issues the bank feels is the reason why the issues are getting repetitively coming in the audit report, it becomes very critical. Okay. So this is the mechanism. Then audit planning, of course, basically taken care by the principals, but of course, the important part is that the staff which is going for that concurrent audit should be adequately trained. So this is one of the purpose why we are organizing these webinars and seminars. And the Board of Studies is working hard to actually train the students who would be basically acting as the staff looking at the concurrent audit. So that training part we are trying to take care here. Okay. So it is important. Then updation of knowledge, of course, Kuntal Bhai also talked about there's a manual on concurrent audit of banks. Then there is a guidance note on audit of banks. Then there would generally be the RBI circulars, master circulars, which are available on the RBI website. So anybody can go to the RBI website. The address is rbi.org.in. You can go to the RBI website. There is a link to the master directions to the circulars issued by the RBI. You can download those circulars, go through those circulars, and understand the various guidelines which RBI has prescribed for various operations. Of course, that has to be supplemented by the circulars issued by the bank itself. So every bank would have now a system of an intranet, some internal website, internal web page, where you can actually go. There would be a link for the internal circulars issued by the bank. You need to actually download those circulars, go through that circulars to understand the detailed procedures. So RBI guidelines would basically give you the broad principles. The detailed operational guidelines would come from the internal guidelines issued by the bank. So that you need to look at. Then concurrent audit, generally the banks, in case you are doing a concurrent audit, would also sometimes provide you a concurrent audit manual. So that also you may look at for the purpose of doing your concurrent audit work. Then very important document which you should keep with you is financial powers. So in a bank, in a system, in any financial organization, the complete powers is not delegated to a lower level. So there would be basically a hierarchy of financial powers. That becomes very critical in a banking system. So there would be financial powers as to expenses, how much expenses can be done by the branch manager. And in case the expenses go beyond a certain limit, it has to be approved by somebody senior. And this is also very critical when we'll talk about loans, we'll talk about it. So there's a chart for loans also. How much loans can be approved by the branch management, and in what cases the approval needs to come from somebody senior. This becomes very important and should be a handy document with you while you are going for doing a concurrent audit. Now, what we have seen practically, and which is a very, very useful tool for us as a concurrent auditor, is that now everything is online, right? Kuntal Bhai also spoke about it. Now, this becomes very critical for us to understand. So, as a youngster, I'm sure everybody of us is very good with technology, even maybe better than us in that regard. So, you have an edge there. So, what we can do basically, what we need to understand here is that in case of banks now, the transaction is so voluminous. And of course, now the banks do not have that kind of a printing mechanism wherein they can print a lot of those transactions, a lot of those reports. So we need to understand that we have to do audit through the system only. So we need to understand their system. Now, what is important for any audit, please understand, is that you should be aware. Either you're going to do a 100% verification or you're going to do a sample verification. In both the cases, it is important for us to understand that we should know what is our universe, what is the complete transaction list in a particular transaction. So let's talk about a particular transaction, say locker issuance. So we should be able to know how many lockers has been issued during the month, right? In case of, say, locker closure, how many lockers have been closed during the month. So unless until we are aware about the total cases, we will not be able to decide how many cases we need to check and what kind of sample we need to take. Because why it is so important? Like, for example, again, we'll take, this is how we practically start with the audit, is that suppose we have to check for new account opening during the month. So we will talk about KYC, so we'll understand. So we need to check for KYC requirement in new account opening. Now, unless until you have the complete list of how many accounts have been opened, you will not be able to verify whether you have completely done your job or not. Okay, why it is so important? Because suppose there are 50 accounts which have been opened during the month at your branch. Now, the branch manager provides you document for 42 cases. They do not provide you document for 8 cases. So unless until you have generated a list from the system itself as to how many account opening has been done during the month, you will check those 42 cases, you will point out any deficiencies which you have noticed. But 8 cases where the document itself have not been obtained or have not been shown to you, you would be missing out on your audit responsibility. So the first thing which we need to do is to generate some report which can be generated through the system, maybe through a menu command, and which can help us in determining how many cases are there of a particular nature which we need to verify. There are certain reports which I have seen now practically bank generating at the back end and again putting on the intranet, which you can actually download and use for the purpose of the audit. So when we go for a concurrent audit, please try and understand one, the internet site for the circulars, etc., which we discussed, and also please understand the intranet site for these backend reports which are generated. So once you are able to take the list of all these intranet site, you will be able to download these guidelines also, download these reports also, and which would be really useful for you for the purpose of doing your audit. So these are some of the audit trails which we have seen generally generated by the banks. It would differ from bank to bank. So I cannot give you a complete list for each bank. It would differ from bank to bank, but it is very important you understand those areas and download these reports. Okay. Then reporting we discuss is very important. I told you that unless until we do effective and a very correct reporting, the purpose itself of the audit is lost. Okay, because your report is not being verified only by the bank management, the branch people. It would be verified by some senior people also. So your query should be very pointed, very to the point. You should not give a lot of background and all. They understand banking. Okay, so we don't need to tell them what is banking or what is the circular. We need to tell them exactly what is our issue, and the issue should be complete in itself. Whatever you write, that should be complete. It should not leave points that they have to refer to some other document or they have to refer back to the branch to understand what the auditor is saying here. Your audit report, your audit point should be able to point out the complete issue which you have in mind, pointedly to the least amount it is required, but should be complete, comprehensive in itself. Okay, so this is very critical for us. Now, some of the detailed areas which we need to check here. So if we start with cash, then we have KYC and AML. We have general operations. We have loans and advances. Then we have clearing, generally not applicable at the branches now. Then we have Forex. There are some other specialized areas. And then we have areas related to compliances and all. Now, if you ask me as a concurrent auditor, if you ask me as an auditor to a bank, I think KYC and AML and loans and advances are two very critical areas in any banking company. I think the maximum area, the focus of the bank are on these two areas. Then if we look at other areas, specialized areas like Forex and all, of course, it is also very critical area. And where generally what we have seen is there is a lack of expertise, both at the end of sometimes the branch management also, and sometimes the persons who are going for audit also. It is very important that if we are doing an audit for a Forex area, we understand that area before we start doing audit for that area. Okay, so that becomes critical. Okay, now if we look at cash, I think the simplest area to look at, because everybody knows what is cash, how it is to be counted, and basically the counting becomes very important there. And the easiest area to do a fraud also. Why it is easiest to do a fraud into a cash area is because you have to just take out cash, put it in your pocket and walk out of the branch, and the fraud can be committed. So this area becomes quite simple to check, but very critical to check also. Right. The first point would be physical verification of cash, and in case the branch is dealing into Forex, then the foreign currency also might be there in the branch. That also become part of the cash of the branch. Okay. Then we have bait money, clean note policy. So physical verification, how do we go for a physical verification? We are expected to do a physical verification on basically a surprise basis. Now, how does a surprise basis happen? Generally, we are expected to reach the branch before the branch opens, and the branch opening happens in your presence. And then you verify the cash before it is brought out for use for the customers, so that the branch is not aware when you are going to visit, and you are able to verify what cash was kept in the previous day. So one, you have to verify it with there would be a register which would be maintained by the branch, which would be kept along with the cash. You can maintain the denomination wise balance, you can match with that. And also you have to match that balance with the balance in the CBS system. So not only the register is important, but the balance in the CBS system, the accounting system becomes also critical. So when you verify the cash, please match it with both the cases. Then we have bait money. What is bait money? Is basically that generally there is a packet of currency of which all the denominations are noted, all that numbers are noted. Generally, banks use fresh currency so that they don't have to note, say, 100 note numbers. And it is capped with the normal cash. There is no marking which is done on that bait money. And the purpose is basically that in case there is some kind of a robbery which happens with the bank, this bait money would go along with the normal cash. The person who's taking it, that robber, would not be able to detect that it is a bait money. And when he uses that cash, through that usage, the bank or the police authorities would be able to somehow track that where the money has been used and track the culprit. So you can check what is the policy for bait money. Generally, it would be there in every bank. They would have noted it somewhere. See whether it is correctly noted. Sometimes what happens is, what we have seen is that the bait money by mistake is given to some customer by paying cash, and they replace that bait money with some other bait money, but it is not updated in the register. It is not noted somewhere, but what is the correct bait money as of now. So it becomes very important for us that we check that the bait money is has been correctly noted. Then we have a clean note policy of the Reserve Bank of India. Clean note policy means that whatever cash you have kept in the branch, it should be clean. It should not be torn out notes. It should not be notes which are dirty. When you reissue to the public, you can accept those notes. There is no issue. But when you give back to the public, it should be clean notes. They should not be torn. They should not be in 2 pieces. They should not be in 3 pieces. They should be clean notes. Then any notes with slogans and message of a political or a religious nature written across are no longer considered as legal tender. So that you can check. Then non-issuable currency. So certain notes become non-issuable as per the RBI directions. What are those notes? So if you have seen, there are some Ashoka pillar notes, which are very old series of notes, 100, basically in 150 denomination. They are no longer issuable to the public. Banks can accept it. They are legal tender, but they cannot reissue those notes. And notes with political slogans and notes where a watermark is damaged, that becomes very important, right? Pre-2005 series notes also cannot be reissued. So they are legal tender, but cannot be reissued. So the cash which is taken out for issuing to the public, please check whether they should, they contain any non-issuable notes. Then you need to bring it out through your report. Then proper custody, accounting of cash, especially cash in transit. So sometimes what happens if the branch is actually transferring notes to currency chest, or notes are coming from currency chest to the branch. So proper cash in transit mechanism, verification, how they are accounting for it, what security they are taking care of, it becomes very important. Then dual custody of cash and cash keys becomes important. That the cash and cash key should be, so every case in bank, it is basically that there is a concept of a maker and checker. Now, in case of maker and checker, the cash, it is applicable to every aspects of banking. So whether it is basically where you do a transition, there is a concept of a maker and checker. Whether you are handling any valuable, there is a concept of maker and checker. So valuable handling, maker and checker concept is applied is basically that these all vaults you see in the bank, which are kept in the branch, they are having two set of keys. One set, you need to apply both set of keys together to be able to open that vault. So there is a cash officer and there would be a cashier who is actually involved in that transaction. Both would have their own set of key. Both have to be applied together so that the vault can open. So also, please check that actually 2 persons are handling the keys. Sometimes what happens is due to laxity, the cash officer hands over the keys to their own officer, the cashier itself. So which is something which is not acceptable at all, because then it breaks that principle of banking, which is maker and checker. So you need to verify that actually who is handling it. And you are the best person who can actually do it, because you are there at the branch for the whole time. Then there is a cash retention limit. So bank generally keeps a limit as to how much cash you can retain at the branches. So you need to verify what is the cash retention limit of the branch, and need to verify whether cash is kept outside the cash, over the cash retention limit. If it happens, say, in an exceptional case, say 1 or 2 days in a month, it is okay. But whether it is capped for the whole month or for the substantial part of the month beyond the cash retention limit, then of course it needs to be investigated why the branch is doing it, and why, of course, it needs to be brought out through your audit report also. Okay. Then in case your branch is handling ATM, so generally what happens is that branches are handling those ATMs which are attached with the branch. So generally at the bank branch, you will see one ATM which is there in the bank along with the bank premises itself. So a lot of times they are handled by some third-party agencies, which are called as cash replenishment agencies. So if it is handled by a third party, then the bank people are generally not responsible for it. But if the keys of that ATM is handled by the branch, the refilling of notes are done by the branch in the ATM, then the branch is responsible for it. So first point is to understand whether your branch is responsible for it. In case the branch is not responsible, your responsibility generally would not be there to actually verify the ATM. But in case the branch is responsible for it, branch is refilling the notes in the ATM, then you are also required to verify that. Then again, the same issues would arise. You need to verify the cash balance, physical cash balance there, then the custody of the keys. So again, the maker and checker concept becomes important. So in certain ATMs, you will find there are two sets of keys. In certain ATMs, you will find there is one set of key and there is one password which is there. So password will be handled by somebody else. So basically, but that maker and checker concept would still continue there. There are certain machines which are there now, which are basically we say this cash recyclers, they say. So basically these machines, what they are doing is they are also accepting cash and they are also giving out cash. So that also becomes a new concept. Now it is like a few years now in the line. So that also becomes important. So that who is responsible for it and how it is being handled, that becomes very important. Then again, like we have a retention limit for cash at branches, we have a retention limit for ATMs, that how much cash can be kept in ATM at one point of time. So a lot of times what we have seen is that branch people keep more cash than the retention limit, because otherwise whenever the cash dries out of the ATM, there's no the cash is low, the branch has to go and refill the cash. To avoid it, they keep more cash than it is allowed in the ATM. So then it becomes very critical for us as a concurrent auditor to point out that if they are going beyond the retention limit, that it is something which is not acceptable. So cash, then counterfeit note. Now, in case of counterfeit note, it becomes very critical. Why? A lot of times we have seen counterfeit currency being used for bank transactions. Now, every bank you go to, they would have some kind of a machine which, when they put that cash into that machine, they are able to detect counterfeit notes. Okay, so the bank is earlier they used to depend upon the agility of the cashier to detect counterfeit notes, but now it is not required. The machine can actually handle that, and it is mandatory requirement also of the RBI that every branch should be equipped with these machines and basically UV lamps, ultraviolet lamps, for the purpose of verification of any counterfeit currency. Okay. Now, what is the process in case somebody deposits cash and there is counterfeit notes in it? So, what is the process? How it is to be handled? So, RBI says that notes cannot be returned, or they cannot be destroyed also. So a lot of times we have seen is that bank branches, what they do is they will burn out the note or they will tear the note. So this is something which is not allowed as per the RBI regulations. And sometimes what we have also seen is that they return the note to the customer. They tell them that this is counterfeit currency, give us another one. And they return the counterfeit currency to the customer. This is treated as very, very serious. This is actually considered as a criminal offense. And so they say that failure to impound counterfeit note detected will be construed as willful involvement and penalty will be imposed on the bank also. So in case you notice any such issue, you can actually point it out to through your audit report. Then in case they detect a counterfeit note, so how they have to handle basically is they would have to stamp that counterfeit note. You can see the format of the stamp which is there. So they will stamp on the counterfeit note that this counterfeit bank note has been impounded. Then there is a register which they have to maintain for the same. Use of the machine to examine authenticity. This we have already discussed. Then they have to issue a receipt to the person who deposited cash. This is in running serial number, that you have deposited this cash and we have detected this counterfeit note input. So this receipt has been given to the tenderer, and he has to sign on that. The tenderer has to sign on that receipt also. If he refuses to sign, it is also okay. Then also the receipt needs to be issued. Now, whether a FIR needs to be done, no. So they say that only in cases where in a single cash deposit, you find up to 4 pieces in a single transaction. Somebody gives cash for deposit, 4 notes or more are detected in a single that cash which has been given. So if it is 4 note, then there is a consolidated report which goes to the nodal bank office. If it is 5 or more notes in a single transaction, then an immediate FIR is mandated. Okay. And then there is a copy of monthly consolidated FIR which is sent to the forged note vigilance cell at the head office. So there is a forged note vigilance cell which is to be maintained by the head office, and a monthly consolidated report will be sent to it. So the critical points, just to wrap up here, is that notes, counterfeit notes cannot be burned, cleared off, cannot be returned. In case counterfeit note is detected, you have to stamp it as counterfeit. Register for the same is to be maintained. A receipt is to be issued to the tenderer. And in case counterfeit note detected are 4 or more, then of course some action in terms of FIR is to be done. Okay. Now, then mutilated note. What is a mutilated note? Is basically that a note which is comprising of more than 2 pieces. So if it is only 2 pieces, it is not a mutilated note. It may be a non-issuable note, of course, but it is not a mutilated. Or note of which some essential portion, of which a portion is missing, is considered as a mutilated. So what is so great about mutilated note, why we are discussing about mutilated note, is that in case a note becomes a mutilated note, then suppose it is of a denomination of 500, then it may not fetch you 500 itself. So there is a note refund rule 2009, which has been also amended in 2018 to take care of that new currency, new 500 and 2000 series of currency. So basically that would tell that which note would have full value. So you give a 500 rupee note, whether it will give you 500, so a bank would exchange it with a 500 fresh currency with you, or would only give you 250, or bank might not give you any money against it. Okay, so that is determined by the note refund. So first thing is to understand how what currency is considered as mutilated. If it is not mutilated, then it would continue to have full value. If it is mutilated, the bank would determine based upon that note refund rules whether it is a if it is a mutilated currency, whether it is of full value, it is of half value, or it is of no value. Okay, and there are 3 formats which are applicable here: DN1, DN2, and DN3, which are to be used here. So whenever you see such a transaction happen, please look at these process and understand. You can go through these note refund rules and understand. So basically, that is the value is determined based upon the largest portion which you see of that note, which is unbroken, and you have to see based upon some scale which is there as to how much percentage of this note is unbroken. And there is also a concept of a deliberately tiered note. So if there is a deliberately tiered note, so sometimes people actually deliberately tier notes for some fraudulent reasons, then in that cases, these notes are considered of 0. Now, very important point here is when we talked about frauds, is that of course we understand frauds. What is basically a fraud is where there's an intention, dishonest intention to cheat or defraud the bank or some customer, etc. It is considered as a fraud. But RBI has also said in relating to cash that if there is a cash shortage of more than 10,000, so So the cashier itself might have reported that after the date transaction, somehow he has reported that there is a shortage of cash of more than 10,000 rupees. Or say you visited as an auditor in the morning, you verified and you found out that there is a cash shortage exceeding 5,000 rupees, and it was not reported on the previous day by the person handling cash. So in case there is a cash shortage, that needs to be reported immediately. But they have not done that reporting. They have kept it as if the currencies, the cash are full, there is no shortage, and you have detected as a visiting auditor. Then in that case, it is to be reported as a cash, even when you might feel that there is no intention to cheat or defraud the bank or any staff, any customer, etc. Then also it is to be reported as a fraud. It is a mandatory requirement of the RBI. So that we need to keep in mind, because the reporting of fraud is to be done by the bank, but the auditors are required to verify whether that reporting has been done or not. So in case some reporting is required to be done by the branch and it has not been done, the auditors are required to report it through their auditor. Okay. Then when we talk about KYC and AML, so it basically comprises of two portions. Though generally we use it together, but it is actually not one area. It is actually comprising of two areas. KYC, we all know, is Know Your Customer guidelines, and AML is Anti-Money Laundering guidelines. Okay, there are two basically portions to it. Now, when we look at, we touch upon some relevant aspects of KYC and AML here. Now, when we look at this area, basically, so we have Master Direction of Know Your Customer Direction 2000, issued by the Reserve Bank of India, basically, which are very relevant for us to understand. Now, what is happening is, now again, we have to look from the operational point of view of the branch for where we are doing an audit. In certain banks, what has been done is that KYC, account opening, basically, has been shifted to some centralized unit. So the branches are not doing account opening at the branches themselves. Most of the private sector banks which you see generally follow this policy. In case of public sector banks also, certain banks have started following this policy. So if you are actually auditing one of those units which are into account opening, of course, this area becomes very, very critical for you. But in case you are doing an audit for a branch where the account opening has been shifted to a centralized unit, then maybe the AML part would still be very important, but the KYC part may not be completely applicable to you. Some portions only you might have to look at. Now, in case you are handling a branch which is actually looking into the account opening also, then KYC, of course, is fully applicable to you and need to be fully vetted. So one of the critical areas where banks actually find a challenge, or banks have seen a lot of issues, and banks have been penalized also by the RBI, is basically KYC and AML. So we need to be very careful about this area. Now, what can be critical areas here? What can be areas which needs our attention is? So one, you can refer to Rule 114B of the income tax rules, basically. So these rules, actually, income tax rules 114B actually tells you transaction which require a PAN or Form 60 in case any customer conducts such a transaction. Some of the transaction is cash deposit of more than 50,000 in any bank during a single day. So if customer deposits cash in the bank of more than 50,000 rupees in a single day, then it is considered as a that he has to either give a PAN number or a Form 60. So Form 60 is basically that he does not have a PAN. Okay. Similarly, somebody deposits foreign currency in his bank account exceeding 50,000 rupees, then PAN Form 60 would be required. Then in case somebody is coming to the bank, wants an issuance of forex exceeding rupees 50,000 in cash, then PAN Form 60 would be required, though there is a separate circular under the AML guidelines from RBI, wherein it is not allowed, actually, that forex cannot be issued against cash exceeding 50,000 rupees. But if you look at the Rule 114B of the income tax rule, it somehow says that it can be done, but because If there are two set of guidelines under two different laws, you will have to follow, because you have to follow both the rules, you will have to follow the stricter of one of them. So stricter one is basically saying that it cannot be issued, so it cannot be issued. Then any account opening transaction except for a time deposit, then time deposit exceeding 50,000 rupees, including for renewal, you require a PAN or a Form 60. Okay. Then certain transactions which cannot be done. Again, so this needs to be reported. So any such transaction done would require immediate reporting, because it is something which is not permissible. Okay. So one is that bank cannot issue demand draft. Mail telegraphic transfer, generally you don't see them nowadays. Traveler's check exceeding rupees 50,000 in cash. Okay, this is something which is not allowed, not permitted. Even if he gives a PAN number or a Form 60, it does not help. Sale of gold, silver, platinum, that was being done by the banks earlier. Now it is not permitted per se, but earlier when it was permitted beyond 50,000, in that cases also it was required that it should be done through debit to the account only. Okay. Now in any case, RBI has stopped banks from selling any gold, silver, or platinum from their branches. Then very important that whatever demand drafts are issued, the person who has paid for it, who has purchased the demand draft, his name should be mentioned on it. In case there is a payment, somebody has a fixed deposit and he wants it to be paid back to him, and he wants the payment in cash, it cannot be done for amount exceeding 20,000 rupees. Then in case a customer is giving forex, depositing forex in the bank, wants the payment against cash, that I'm depositing forex, please pay me the equivalent value in INR cash. It can be done up to USD 1,000 in case of a resident customer, and USD 3,000 in case of a non-resident customer. Then issuance of demand draft exceeding 20,000, it should have account pay crossing. So what is an account pay crossing? You see two lines which are cross, and it says account pay. So basically that means is that the person whose name is mentioned on the demand draft, only that payment would be done to the account of that person. It cannot be made to any other person, or it cannot be made in cash, basically. Okay. Now KYC policy would have basically four portions in any bank. Basically, one is what we call as a customer acceptance policy, then a risk management policy, then customer identification procedures, and then monitoring of transactions. So these are the four key elements of a KYC policy. Now, when we look at the customer acceptance policy, what is the customer acceptance policy talking about? So basically, it is giving you some do's and don'ts. Basically, what you cannot do, what is something which is not permissible. Things like you cannot open account in name of any anonymous or fictitious or benami. So you cannot, any account which is open should be open for somebody who's actually there, who is actually a person. That person may be an individual, he may be an HUF, he may be a LLP, he may be a partnership firm, he may be a proprietorship firm, he may be a company. But there should be some entity, legal entity which is there. There should be some individual which must be there. It cannot be open in name of an anonymous or fictitious or benami names. Then any account where customer is not cooperating, not giving you documents, proper document, that customer cannot be allowed to operate an account. So unless until you are fully satisfied with the document submitted by the customer, you cannot allow the customer to operate the account. Then in case they are joint holders, so you have an account which is in the name of Mr. Ram, or there can be an account which is in the name of Mr. Ram jointly with Mr. Sham, then the documents needs to be obtained for both Mr. Ram and Mr. Sham. Okay. Then mandatory information sought while opening and re-KYC. Re-KYC is basically, earlier we used to understand KYC as a one-time process. That while opening the account, we have to take certain document which we are going to understand. and then the account can continue forever. So the account can continue forever, but you are required to periodically update this KYC information, know your customer information, because the address might have changed, the customer details might have slightly changed, or there might be certain other issues which the bank needs to understand or need to keep into record. Okay, so this process of KYC, know your customer, has to be periodically updated. So it is called as a re-KYC. So there is a process for re-KYC also, and there is some prescribed time limits also for re-KYC of different accounts. Then any additional information. So some of us would have definitely opened accounts, especially to get your checks from your principal, basically. So when you see that form, it comprises, it may be of like 4 or 5 pages or 6 or 7 pages. So there's 2 portions in the form, account opening form. One is what we call as mandatory information, without which the bank cannot open the account. And there is another portion which is basically an additional info or optional info which the bank obtains for the purpose of understanding the customer better or offering them various financial products. It can be life insurance, etc. So that additional information, which is not mandatory, can only be obtained with the explicit consent of the customer. He cannot be binded to give that additional information. Mandatory information he is required to give. That additional information he is at the option to give on. Okay. And customers should not be in the sanction list circulated by the Reserve Bank of India. So what is the sanction list? So RBI keeps on circulating our list, the customers or the organizations which are not permitted to have any banking relationships in India. So that we need to keep in mind. Then PAN obtained to be verified with verification facility. So any PAN you give to the bank, they need to verify it with some facility to verify whether the PAN is genuine and it belongs to the customer who is basically giving that to the bank. Then equivalent e-document is obtained, DSCs to be verified. So you can even accept e-documents now. So that is something which they have permit. And then in cases where the persons are basically financially or socially disadvantaged, so the poorer section of the people which do not have a lot of documents, which do not have a lot of references to give, in those cases, a simplified KYC can also be done, which allows them to operate the account up to a certain limit without requiring that detailed KYC procedure, which is applicable to a normal case. Okay, then risk management basically, and the concept of re-KYC becomes important here, is that any customer which the bank accepts, they have to basically divide it into a low, medium or a high risk customer. And they can have another category, which is what we call as a PEP or a politically exposed persons, which are considered very high risk customers basically. And this categorization would be done on the basis of the customer identity, social financial status, the nature of business activity, the information about the client business and their location. And while considering customer identity, the ability to confirm customer's identity document through online or the services offered by issuing authority may also be factored. So you have to basically decide that in all the cases, all the customers, whether they are to be considered as a low risk or a medium risk or a high risk customer. That would also determine the basis of that re-KYC which you have to do. So in case of a low risk customer, the re-KYC might be done on a longer duration basically. So you would say for 5 years that re-KYC may not be required. In case of a medium customer, medium risk customer, it may be required to be done in like something like 3 to 5 years. And in case of a high risk customer, it may be required to be done every year or every 2 years or every 3 years. So that would be basically the purpose of the bank basically. Then the identification. So what we see is the account opening form. We see the documents which are to be obtained along with the account opening form, which are basically what documents we will be looking at. You can have Aadhaar number. It is again, which is not mandatory, but generally banks would like to obtain Aadhaar now. Passport, driving license, voter identity card issued by the Election Commission of India, job card issued by NEREGA, then letter issued by National Population Register, any other document which may be notified in these cases. So these are officially valid documents, or OVD basically. Then utility will can be used as the address proof, basically, which is not older than 2 months. Then property or municipal tax receipt or pension payment order. So basically we need an identity document and need a address proof, basically. So identity document we have discussed here, and address proof can be these also, and it can be from the identity document also the address proof can be obtained. But generally 2 documents the bank would ask for the purpose of verification of your KYC. In case of basic saving bank deposits, as I told, for the socially or economically disadvantaged class, you can offer a basic saving bank deposits, or it can also be called as a small account by certain banks. There's a limit up to which you can do transactions, but it would require only a simplified KYC. That stringent KYC may not be required. So identity document may be enough. The address proof may not be required that strictly, and the limits has been specified here. So small account in which aggregate of all credits in a financial year does not exceed rupees 1 lakh, and then aggregate of all withdrawals and transfer in a month does not exceed 10,000. The balance at any point does not exceed 50,000, and small account is for 12 months and then may be extended for further period of 12 months. So this is there. Then if in case a customer is a company, so this is for individual. In case a customer is a company, then the KYC needs to be obtained for the company and for all the persons who are the beneficial owners. So the company is a legal entity. Ultimately, it is controlled by some natural person. Okay, so we need to understand who are the natural persons before it. So there is a concept of BO, or beneficial ownership. This concept also comes in Companies Act also. It comes in nearly every financial law which we have. Even FEMA also has a concept of a beneficial ownership. Even your Prevention of Money Laundering Act also has a concept of a BO. So basically that is important. So ultimately there is a individual, a natural person beyond any legal entity. So we need to understand who is that BO, who is that natural person beyond it, and also need to obtain KYC document for that natural person. That is why it becomes very critical for us to identify those beneficial ownership. Why it is so important? Because so that these legal entities do not become a kind of you can shell beyond which somebody can do some activities which are not permitted, or we are not aware who are the persons beyond it actually. Okay, so it becomes important. So they have defined what is a beneficial ownership, and of course the identity documents, the address document needs to be obtained for these beneficial ownerships also. Similar is in case of partnership firm, unincorporated associations, or BOIs, body of individuals, and in case of trust also. So the percentage may be different for the beneficial ownership to for the purpose of obtaining KYC document, but ultimately the concept remains the same, that you have to obtain BOs, the documents for those BOs, the beneficial owners also, when it comes to these legal entities which are basically not natural persons. Okay. Then in case of sole proprietary firms, they say that because the sole proprietor and the individual basically be the same, especially when we refer to the Income Tax Act. But in case of some because these sole proprietor firms would be open in the name of the firm, and they would be basically current accounts. So in those cases, of course, the beneficial owner is the proprietor. So the document for that proprietor needs to be obtained. And for that firm also, at least 2 documents are required to be obtained, which are either from the registration certificate, sale tax, income tax return, CST, VAT, GST certificate, etc. At least 2 documents in the name of the firm also it's required. And this is sometimes proving challenging for opening accounts of the proprietorship firms, but this is something which the banks have to follow. Bank can actually dispense with one of the documents. So one is mandatory. Second, they can disband at their discretion, at their risk. The bank can take a call in case they are otherwise satisfied with the documents. But one is mandatory and has to be obtained. So as an auditor to a banking company, we are seeing account opening, especially for sole proprietorship firms. Please also check the document obtained in the name of that sole proprietorship firm itself. Okay, then periodical updation, that this we discuss. So in case of low risk, it can be up to 10 years. In case of medium risk, it can go up to 8 years. And for high risk, it cannot go beyond 2 years. Of course, it is subject, the banks can go for a more stringent guidelines in these cases, which you will have as a customer, you will have to follow. So you need to understand the KYC guidelines of the bank and follow these guidelines for the purpose of audit. Then suspicious transactions are there, which we need to understand. There's one other important guidelines which when you look at account opening, or which you otherwise also banks are following nowadays, is that current accounts cannot be open for all the customers. Or it can say a company, say ABC Private Limited, may have a relationship with different banks also. There's no limitation. But in case they are enjoying certain credit limits with certain bank, then every bank cannot open their current accounts. So there is a chart which RBI itself has prepared. I'm giving you that chart that you need to check, keep in mind for the purpose of that current account opening at the branches. And this is something which has been going on for now more than 2 years now. A lot of banks are even following up with the customers, asking them to either provide documents or close the current account. So at your branches, please see the process, how they are basically verifying this current account process. So basically what it says is, if you look at the chart, it says borrower approaches a bank for opening current account. Okay. Does the borrower have a CCOD facility from the banking system? If yes, so CCOD, what it is, cash credit or overdraft limit. Then in that case, if the exposure is less than 5 crore, so if the CCOD facility is less than 5 crore, any bank can open the current account, subject to undertaking from the borrower that once the limit grows beyond 5 crore, then they would inform the bank. If it is more than 5 crore, then it can be only opened by the bank which is giving them CCOD facility. No other bank can open the current account basically, and that also they have defined in terms of exposure having more than 10% or more. So I'll not get into much of it, but of course you need to understand, in case of a CCOD facility more than 5 crore, no other bank other than the banks who have given them the credit facility can open current accounts. And otherwise, if the customer does not have an exposure, he has no limit, he has not taken any loan from the bank, then of course there is no limitation on the current account opening with multiple banks also. Okay? And in case other than, so the customer has exposure to the banking system, he has say obtained loans, term loans or demand loans, etc. from the banking system. In case the total limit is less than 5 crores, then any bank can open current account, again subject to undertaking from the customer. In case it is 5 crore to 50 crores, then any lending bank, the bank who has lent to the customer, can open the current account. Non-lending banks can only open collection account. And 50 crores or more, then there is a concept of some escrow which has to be. Basically, you need to understand, if it is less, customer has has taken loans from the banking system, then only this restriction is applicable. If he has not taken any loan from the banking system, then he can open current account with any bank, multiple banks also, there is no issue, subject to he giving documents, KYC documents, which is required by that bank. In case he has obtained a limit, if it is less than 5 crores, he can open accounts with banks, multiple banks also. If it is exceeding 5 crores, then there is some kind of restriction which has to be maintained, and only the lending banks, subject to certain condition, can open current account for the customer. So this is a very important guideline which has a very, very far-reaching implication of the banking side, which we need to understand. Okay. Now, we'll move to the other areas of operations. And wherever you have any queries, we'll keep at least 15 minutes of our time at the last for the purpose of resolving what queries you have on this area. Now, in case of dormant or inoperative account, so what is a dormant account basically, or an inoperative account? So generally, if you do not do any transaction in an account, the customer is not operating the account, is not doing any customer-induced transaction in the account for generally 2 years or more, then the bank marks that account as a dormant account or an inoperative. What is the purpose basically? Because it is a fraud risk area is there, because say the customer is not operating. And the internal staff knows that this account is not been operated, but there is a balance in the account. So there is a chance, there is a risk that somebody might try to take out the money from the account, thinking that the customer is not operating, the customer would not know. So this becomes a risk. So that is why bank has a policy. RBI has directed a policy where in case there is no customer-induced transaction in the account for 2 years or more, then the account is marked as dormant or inoperative. Now, what would happen in that case is the transactions in the account would be stopped. So bank can recover their charges and all, there's no issue, but other transaction would not be allowed unless the customer approaches now the bank with a letter saying that please mark the account as operative. And of course, banks would generally ask for some KYC document again from the customer, and some senior management person like the branch manager might be authorizing such removal of dormancy. So as an auditor, as a person who is required to verify, we need to check out cases where the dormancy activation has been done, for how many cases it has been done during the month. Check for the letter from the customer, verify the authority of the branch manager and the KYC document which has been done. And please also look at the first transaction which has happened in the account after the removal of dormancy, which is very, very critical. That if that removal of dormancy itself has been done using forged signature or something, that transaction which has been done in the account will really help us in understanding that what is the kind of transaction which has been done, whether it seems to be a case which needs to be reported as a suspicious activity or a suspicious fraudulent activity that we will be able to verify. And very important guidelines of Reserve Bank of India, which you can verify, is that no panel charges for non-maintenance of minimum balance can be levied in any inoperative. So there is some kind of a minimum balance which every bank gives out as to how much minimum balance needs to be maintained. In case of an inoperative account, if the minimum balance is not maintained, no panel charges can be received. Okay. Then we have a concept of basically deposits when we talk about. So deposit would include your current accounts, your savings account, your fixed deposit, your recurring deposit. So there are certain guidelines which are applicable here. Some of them I would like to bring to your notice, like payment of saving bank interest on overdue FDR. So what is an FDR? Fixed deposit receipt. So it will have a start date, it will have a maturity date. Now certain fixed deposits generally now banks keep in automatic renewal. So whenever it matures, it is automatically renewed for a further period as per the original tenure. Now in certain cases what happens is that it is not under automatic renewal, and the FD becomes matured, and then it is considered as, from the next day, it is considered as a overdue FDR. Then the amount is due for payment, it is overdue for payment. So say the customer approaches the bank after the FDR has become overdue. Say the FDR becomes overdue on 1st September. Customer only approaches the bank on 1st December. So between 1st September to 1st December, because was not an FDR, it will not get the FDR interest. But the RBI says that this amount which is lying as overdue FDR would get either the saving bank rate of interest, whatever is the saving bank rate of interest of that bank, it will get that rate, or the contracted rate of So the rate at which it was made, that FD was made, whichever is less, that the bank would give to the customer mandatorily. Okay, so the money is not lying without any interest. Some interest at least the customer would get. Okay, then in case there is a current account name open in the name of an individual or a proprietorship concern, then in that case, in case of the death of the account holder, then from the date of his death till the date of payment, this account, when it is paid to the legal heirs of this person, it would get a saving bank rate of interest. Then, in case there is a fixed deposit, say it is in name of joint holders, say Mr. A and Mr. B jointly holds a fixed deposit. In case of premature closure of deposit, so say the maturity date of the deposit was 1st September, but the customer needed some money, so he went to the bank on say 1st August itself, told them to close the deposit prematurely. Then in that case, the signature of both the joint account holders would be required, even when the mandate, when the requirement was the signature of a single person. But in case of premature deposit, signature of both the customers would be required. Then in case what happens is some deposits are given to the bank and they are frozen by some authority, say the income tax authority or GST authority or some court order, then the renewal would have to be automatically maintained by the bank. So this becomes very important. Okay, then there is a concept of panel charges on non-maintenance of minimum balance in savings bank account. So you will see that in case the balance goes beyond below the savings, the minimum balance, bank generally charges a penalty for it. But what is the process? So it says, the RBI says that if minimum balance is not maintained, customers to be informed by SMS or an email or a letter to rectify that within a period of 1 month. So you cannot just start levying minimum balance charges. You have to first inform the customer, give them a warning, and give them a period of 1 month to rectify the situation. If they do not rectify, then what would happen? If they rectify, then it is okay. You don't have to levy any charges within a period of 1 month. If they do not rectify within a period of 1 month, then panel charges can be recovered after giving intimation to the customer that we have recovered panel charges. And the panel charges are to be directly proportionate to the extent of shortfall. So, say suppose the minimum balance is 5,000 rupees. Somebody is maintaining 1,000 rupees. Somebody is maintaining 4,000 rupees, right? So the charges cannot be equal for the person who is maintaining 1,000 and who is maintaining 4,000. So 4,000 would, somebody who is maintaining 4,000 rupees would get a lower panel charges. And somebody who's maintaining only 1,000 would be levied a higher panel charges, basically. And you cannot bring an account to negative balance. You can take it up to zero. So say the minimum balance charges is 500 rupees. After 2 quarters, bank have charged 1,000 rupees. So balance becomes zero for somebody who's maintaining 1,000 rupees. They cannot take it to a negative balance. They cannot make it negative. They can go up to zero. They cannot make it negative by levying minimum balance charges. That is simply not allowed. Okay. Then minors above 10 years can open and operate saving banks independently. This is something that they have confirmed. And when they become a major, then there's some process which needs to be done by the bank, including obtaining KYC documents, etc. And fresh specimen signature needs to be taken from that customer. Then interest on deposits. Interest on deposits, there are certain regulations which are there. So interest on deposits to be rounded off to the nearest rupee for repeat deposits. There's some concept called an FCNR deposit. We'll understand it a little later when we talk about forex. It can be rounded off to 2 decimal places. Deposit which are maturing on a non-business working day. So suppose you made a fixed deposit. It is maturing today on 1st January 2023. Now today is a Sunday. The banks are closed today. So you, as a customer, the customer would not be able to approach the bank for the purpose of renewal of the deposit or taking the money. So the RBI says that in these cases, when the deposit is maturing on a non-business working day of a bank, then automatically it would get an interest for the next up to the next working day. So next working day is 2nd January. So even when the deposit is maturing on 1st January, it will get an interest of 1st January also, and only on 2nd January the interest would stop, and the customer has the opportunity to either take the money or get a renewal of the deposit. So that is mandatory. On saving bank accounts, they say that up to 1 lakh, you have to give a uniform interest rate. So you cannot differentiate between customer to customer. Beyond that, you can have a differential interest rate. So you can offer a higher rate of interest for somebody who's maintaining balance beyond 1 lakh. Okay. Then in case of non-resident deposits, minimum, in case of resident deposit, the minimum tenure is 7 days. Fixed deposit. So somebody who is maintaining a fixed deposit cannot make a fixed deposit less than 7 days. If he has created a fixed deposit for 1 month, but he goes after 6 days for premature closure of the deposit, he'll not get any interest. So less than 7 days, you do not get, neither a fixed deposit can be created, or premature, if you close a fixed deposit, then no interest would be paid. And in case of NRE accounts and FCNR account, we'll discuss it a little later when we talk about Forex. These are non-resident deposit, minimum tenure is 1 year. Okay. So this is there. And bank can offer a differential interest rate. In case of fixed deposit, we see generally bank offers a higher rate of interest for, say, senior citizens, for their own customers, for their own staff, bank staff, including retired bank staff. So up to 1% they can offer extra. But this senior citizen benefit of it is the discretion of the bank. So it is not mandatory. It is the discretion of the bank. But if the bank has had decided to give an extra interest rate up to 1% maximum to senior citizen, it cannot be given to HUF, Hindu undivided families, where senior citizen may be a karta or a member, or to non-resident deposits like NRE and FCNR. This extra interest rate cannot be offered even when the customer might be a senior citizen. So that is important. Then we have a concept of nomination. So what is nomination basically is that the customer, while opening an account or thereafter, before the closure of the account, nominates a person that in case of my death, this person can get the money from my account, basically. So it basically simplifies the procedure. In case of a death of an account holder, the bank can, basis the nomination, can hand over that money to the nominee, basically. However, this person who is appointed as a nominee does not become the legal owner. So he only takes the money as a trustee to the legal owner, and ultimately it is only for the simplification of this process of handover of the money in case of death of the account holder, and the money actually belongs to the legal heir only as per the law applicable to that person. But the bank would be safeguarded by handing over that money to the nominee, basically, unless until there is any legal dispute which is brought to the attention of the bank, they can actually hand over the money to the nominee. Okay. Now, expenses, I told you that whatever expenses the bank is incurring, so it is like a normal business unit. So they must be incurring certain expenditure as a normal business unit who is operating would do. So one, I told you about there is a financial power chart. So what expenditure the bank management can do, what expenditure requires a confirmation from the senior management. That should be aware of. Then TDS provisions become important because the expenditure is being incurred at the branch. So who is looking after the TDS? The branch would be basically deducting the TDS. They have to deposit the TDS. So please be careful about such provisions. Then pension payment. So this is basically called as or pension payments. Basically, we can look at this is basically called as government businesses. So basically, when you are paying pensions on behalf of some government department or some government itself, then life certificates are to be obtained. Life certificate is to ensure that the person who is receiving the payment is alive, because after his death, the pension would stop. Then non-employment and non-remarriage certificate to be obtained. It is basically where the requirement is such that in case of non-employment and in case of family pension, non-remarriage only, the person would be able to obtain the pension. Then that needs to be checked whether the bank is actually obtaining, what is the process of obtaining, and what is the process for marking it in the account so that the pension keeps on coming. And wherever this is not submitted, the pension is kept on hold. Okay. Then we have concept of lockers. So a lot of us would have operated lockers along with our family members sometimes. So they might have taken you along. So locker is basically for safekeeping of documents or jewelry, etc. in the bank, basically. So now in case of lockers, there are a lot of things which be kept in mind. So there are two set of keys here again. One is a master key, which is kept with the bank, and there is another key which is called as the customer key, which is kept with the customer, basically. So in case a locker is to be operated, the customer has to put a key and the bank has to put a key. The person who is holding that locker master key has to put a key. They are to be used together for the purpose of opening a locker. So again, a concept of the maker and checker, where the bank cannot operate the locker individually without the customer's concurrence, and similarly, the customer cannot operate the locker without getting it the master key, without some bank officer putting the master key there. So it is like that only. Now, please, this becomes a very critical activity. So why it becomes a very critical activity again? Because again, the contents of the locker is not known to the bank, but they cannot be operated once the locker has been issued to the customer. But there's a chance that some fraud might be done. How fraud can be done is that what happens is, say, suppose there is a surrender of locker. Now, when if locker is surrendered, the same key is not given to another customer. Why it is not given is because the person who has surrendered, say Mr. X has was operating a locker number, say 25 in the bank, right? So he had that customer key. Now that customer key is with him only in his possession. He might have made a copy of that customer key, right? So when he has surrendered, if the same key is used for that same locker, he knows that he has the copy of it. And if he somehow is able to convince the bank by signing the name of the new customer, he will be able to operate the account, the locker of the new customer. So generally, the bank has a system of interchange of keys. So very important that wherever locker issuance you see, locker issuance is like opening of an account. So it would invite that KYC document. It would invite the locker form needs to be filled. The bank in such cases, so where a surrendered locker is reissued to some other customer, they would interchange the key or they would get the lock replaced so that the no fraud can be done in the locker system. So this is very important activity which we might have to see. Then there is also a likelihood, and we have seen cases where in banking system where lockers were issued to some customer without taking proper documents. Like it is equivalent to somebody opening an account with the bank without giving any KYC document. So so there is a physical verification of locker also. So we take out a report, or there is a register which is maintained at the bank. You'll have to understand. And so how many lockers are there in total? How many have been issued to the customer? So that cannot be opened without the customer's concurrence. And how many lockers are vacant? So for those vacant lockers, the key should be with the bank. So that we need to verify. Okay. Then locker rent recovery becomes important. Then the bank can also take a security in form of fixed deposit, which can go up to maximum 3 years rent and the break open charge in case it is required to break open. And due diligence is required to be done for locker holder also. And one important direction of the RBI is that whatever keys are there of lockers, it should be embossed with the name of the bank and the branch, basically, so that anybody who founds the key would be able to see that it belongs to certain bank and certain branch, right? Then inventory items like blank security items like DD, pay orders, etc., become very important and need to be verified physically so that no fraud can be done through the misuse of these inventory items. Okay. Then ATM cards or debit cards or checkbooks issued to the customers, not delivered to the customers. Generally now what is the system is that these are personalized. The name of the customer is printed on the checkbooks, on the debit cards. So they are not issued from the banks, branches generally. They are issued from a centralized location which prints and then couriers that to the customers. But a lot of banks have a policy that in case it is not so delivered to the customer, it is returned to the relevant branch. And then the relevant branch, what it does, it basically it keeps it in its safe custody. Whenever the customer approaches, they can deliver it to over the counter after taking the signature and all. Please verify what kind of these checkbooks, etc., have been returned to the branch. What is the safekeeping? Very important that they are kept safely and a proper record is maintained, and they are handed over to customers based upon their signatures verification only. Okay. Then fixed assets verification becomes critical. We have seen cases where some printer or computer issued to the branch was taken home by some officer of the bank. So it becomes important that what kind of register is being maintained for physical verification, for control over the fixed assets, and whether we have ever done a physical verification of the fixed assets of the branch. Okay. Then office accounts. Now, every bank would have some kind of office accounts with them, which are basically divided into suspense and sundries, basically. So they are used for various banking operations. They are a necessity. But these accounts actually create a significant risk for the auditor because they have to verify the entries, especially long outstanding entries in the account. So please make your audit process in the sense that we are able to verify the nature of entries passed in the account and the long outstanding entries in the account. Then frauds we have discussed. So fraud reporting needs to be done. There is an online system of the Reserve Bank of India. There is an XBRL system. Fraud is to be reported within 3 weeks of detection of the fraud, mandatorily. So in case there is a delay or the fraud is not reported, the banks have been penalized also. As an auditor, we need to verify that the banks are reporting frauds in a timely fashion. Okay. Then availability of cameras, availability of panic alarms and intrusion detection system. And it is not only availability, whether they are in actual working condition. So we have seen cases where panic alarm was installed, but of course it is to be used only in panic. And when the actual requirement arose, they suddenly realized that it is not working. So as an auditor, we can maybe after the customer hours are over, we can do a test check to verify whether they're actually working or not. Fire alarm system, security guard and valid gun license is there or not. And then there are other issues also. So this is their income leakage. So we have a concept of value dating. What is the value dating concept? This is very important for us to understand. And very, very a typical concept to applicable to a banking system is that like in case of a normal commercial organization, what we see is that you are able to do a backdated entry. So say you have done a mistake, you can go in a backdate and pass an entry there. But in case of a banking system, backdated entries are not permitted at the branch level at least, right? So suppose they have to do a entry. Say let's take an example to understand it. Suppose a customer visited a branch, wanted a fixed deposit to be made of 1 lakh rupees by debit to his current account. He gave the request, there was money in the current account, and he gave, say, a request on 1st December. Now, as per him, the deposit should have been made on 1st December. But somehow the concerned officer took the request but forgot to create that fixed deposit. Now, say customer visited on 30th December, asked the branch manager, that concerned officer, to give him the fixed deposit receipt. And suddenly he realized that he has not even created the fixed deposit. Now, customer wants the interest for 30 days. He cannot do a backdated entry to create a fixed deposit. Now, what can be done in such a scenario? So the system allows them to do a value-dated transaction. So the transaction date would be the current date only. You cannot change the transaction date. So in banks, if you see, they are not allowed to change the date in the computer. You can go to your computer, change the date as per the date you want to put. But in case of banks, it is not allowed. They cannot change the transaction, that date in the system. So automatically system would put the date of the transaction as the date on which the transaction is being actually done. So on 30th December, but system allows them to put a value date. So they would do the transaction on 30th December. The transaction date would be 30th December. The value date would be 1st December. So for all purposes, for the purpose of calculation of interest and all, the system would calculate as if the transaction has been done on 1st December. Now, the actual date of the transaction would still show as 30th. The value date would be 1st December. Now, this is a very useful tool for the bank to correct any such errors, but it can be misused also. It can be a fraudulent transaction also. Or the risk is, suppose the customer asks for a deposit, a fixed deposit to be made from his savings account. Now, if you debit the customer account from the date of transaction 30th December only, and you credit the fixed deposit account on 1st December, the customer would get interest on the saving bank's account also from 1st to 30th, and on fixed deposit also from 1st to 30th, which is not allowed. So both legs, debit and credit legs, both should be value-dated. So these kind of issues we have seen. So value-dated transactions, what kind of value-dated transaction your branch has done during the month, you need to verify and see whether they are justifiable and whether it results into any kind of inconvenience. That you need to verify. Okay. So we'll skip this now. We'll move to areas of loans and advances. The loans and advances again is a very, very critical area for any bank. Where you're getting the money, KYC, AML becomes important. Deposits. Where you're giving out money, the maximum area of frauds in a banking system happens. The maximum loss to a bank happens to non-recovery of these loans or frauds in the loans account. So this area becomes very, very critical activity for the concurrent auditor. Again, now in the new age banking, what is happening is a lot of, especially in private sector banks, loans do not happen at the branches. So they are parked into some kind of hubs, credit hubs. But in certain public sector banks, a lot of loans do happen at the branches. Certain loans they might have taken to the hubs. So you'll have to first understand what kind of loans and advances activity is being handled by your branch. Then, of course, your responsibility would be decided from the activity which the branch is performing. Now, there are certain loans which are prohibited. Again, the RBI guidelines provide for such loans, like loans to directors, etc. Then loan against security of own shares, loan against partly paid up shares, loans for investment into small saving instruments like PPF or NSC or KVP, etc. Then security of shares and debenture for loan to propriety or partnership, loans on FDRs of other banks. So, say SBI giving a loan on the fixed deposit maintained with Bank of India is something which is not permissible. Then loans to promoters for contribution towards equity capital of a company is something which is not permissible. So you should be aware as to what are the prohibitions, what loans cannot be given. Then any loans can be divided into fund-based and non-fund-based. Right? So fund-based, what is fund-based basically is that loans where money is being paid out by the bank, where money is involved in terms of bank giving out money. And these can be non-fund-based, like where bank is not giving money, but it is taking some kind of a credit risk. What can be examples of non-fund based is basically PG, bank guarantees, letter of credit LC, or concept of what we call as the LOC, letter of comfort or letter of undertakings. Okay. So there, in case of bank guarantee, so bank issuing a bank guarantee to somebody is not paying out any money, but it is taking a credit risk on the customer, so that in case the beneficiary asks for the money under the BG, in that event, the bank might be at a loss. So they take a credit risk. Of course, it is also considered as a loans and advance only, but here the money is not in. Fund-based, it can be in form of a cash credit or overdraft, so basically working capital financing, or it can be term loans, demand loans. So term loans would be basically for buying out certain assets like a house, maybe a car, maybe. It would be generally in terms of a term loan. Cash credit and overdraft would be basically in terms of working capital. Then bill discounted export finance basically are some of the examples of fund-based. Now, in case of you have to also understand that they are secured and unsecured finances. So unsecured finances where bank do not have some kind of a security, tangible security. In case of secured finance, bank would have some security for offering that credit facilities. Now, you might have also, if you have visited a bank, you might have understood terms or listened to terms like pledge or hypothecation or a mortgage. So what's the difference between the three? So pledge is where, so there is a bailment of goods as security against the loan. So the bank keeps that security itself with them, like in case of gold loans, you see. So they the loan given against jewelry. So the bank keeps the jewelry itself with them. Or in case of stocks, the bank keep the custody of the stocks itself. Or instrument like NSC or KVP against which the loans are granted. So they keep that NSC or KVP itself with them. It becomes a pledge basically. Then we have a concept of hypothecation. Now, what is hypothecation? Is basically it is a creation or charge on a movable property without actually delivering that to the lender. So you generally see this concept more in terms of stocks. So you say the stocks has been hypothecated to the bank. So here the custody of the stock is with the borrower itself. It is not handed over to the bank, but in case the customer is not repaying, the bank can take possession of the stock, sell it to recover its dues. And similar is in case of vehicles. The loan given against, say, cars would be basically hypothecated to the bank. Then we have a concept of a mortgage. Now, mortgage is basically where you transfer the interest in a specific immovable property as security against the loan. So generally, you will see this concept more in terms of immovable property. So housing loans or loan against properties, or where some security in terms of collateral securities taken in terms of immovable property. So you create a mortgage on those assets. Now, mortgage also gets subdivided into basically registered mortgage and equitable mortgage. So that you need to understand what is the difference between a registered mortgage and an equitable mortgage there. Now, in case of cash credit or OD's, calculation of drawing power becomes very important. So this is one concept where you need to understand what is a drawing power. So there is a concept in case of cash credit and overdraft. One is what we call as a sanction limit, and another is what we call as a drawing power. Sanction limit maybe say 5 crore, and drawing power is determined by some security value which the bank, the customer submits to the bank, like stock and book debt statement. So from that stock and book debt statement, some DP would be calculated, drawing power, and though the limit may be 5 crores, and the DP actually say comes to 4 crores, the bank would allow the transaction up to 4 crores. So, and suppose the sanction limit is 5 crore, DP comes to 6 crore, the bank would allow transaction up to the sanction limit only. So DP cannot be beyond the sanction limit. It can be equal to sanction limit. It can be less than the sanction limit. The bank would only allow transaction up to the drawing power. Then there is a concept of renewal of review. So cash credit OD generally would be for a period of 1 year. It can be for a shorter duration also. Thereafter, it has to be renewed The renewal process would basically mean that certain document, financial document would be obtained from the customer, including their balance sheet, and based upon which the bank would decide whether the limit is to be continued at the same level, say 5 crore was the sanction limit, whether it is to be continued at 5 crore, or it can be enhanced also, or it can be reduced also. So it is the choice of the bank. It can be closed also. The bank may decide that we will not allow you any further credit facilities. So whatever amount you have used, you have to repay. So it is basically a review process that whether the limits are to be continued or closed or enhanced or reduced. Then end use of fund becomes important, whether it is used for the correct purpose. So generally, the frauds which happen in these CCOD accounts, generally you will see some kind of lax monitoring on the end use of fund. The end use of the fund has not been properly monitored. The funds have been diverted for other than business use, resulting into a fraud for the bank. Then submission of periodical information, and then regular visits and inspection. So where we have a concept wherein the branch people visit the bank, their customer accounts and premises and verify. And we also have a concept of stock audits, etc. also, which happen there. So again, which are area of interest for the chartered accountant community, where a lot of stock audits happen for the borrower accounts. Okay. Then we have overdraft again. So overdrafts are generally given against the security of either immovable properties or FDRs or some securities, basically. The basic concept remains the same. Here, that submission of statements, say monthly or quarterly statement in terms of stock and book debt may not be required, which is there in case of CC account. But the review renewal process remains the same. The end use of funds become important and regular visits become important. Then term loans are basically loans given for the purpose of acquiring some fixed assets. It is repayable in a fixed period. It can be EMI based, so equated monthly installment, or it can be a fixed principal amount plus the interest on actual basis that has to be incurred from the customer. And periodical statement not be required in case of term loans. Okay. Then bank guarantees, these are basically where these are non-fund based limit. So it is to basically divide into again financial and performance BGs, and stamp duty payments becomes important here. Then letter of credit is used for trade transaction, basically used to facilitate trade transaction. It can be inland, so used for trade transaction within the borders of India, or it can be foreign, so used for international trade. And we also have a concept of standby letter of credit, which is basically a hybrid product between BG and NC. So that is also now being used across the world for various transactions. And this will just skip because we have only few minutes left. Let me just introduce a small portion of Forex to you. And then whatever questions we have, we'll take up those questions. Okay, so we'll take another 5 minutes and then open the forum for questions and answers. So Forex basically a very critical area again, which I told is a very technical area. And a lot of branches in banks you will find do not have the Forex area. So how do you decide which branch is going to do Forex activity, or when you visit the branch, how do you decide whether the Forex area is applicable or not? So the first thing which you have to keep in mind here is that any branch of a bank. So basically we have Forex dealers. We have on the top is authorized dealer category 1. All your banks in India, private sector or public sector, are authorized dealer category 1. We'll not discuss on rest of them. Authorized dealer category 1 would have 3 category of branches, basically banks: A category, B category, and C category. If you are basically doing concurrent audit for a C category branch, it is not authorized to do Forex transactions. So it is a non-Forex branch. Category A and category B both are Forex branches. And in case you are auditing any of these branches, category A or category B, you have to also verify the Forex transactions happening there. Okay, so very critically important. Now, what are the major areas which we need to verify as a concurrent auditor there? So these are the, in case you're going for a forex transaction audit, what are the most important rules and regulations which are applicable to it? So Foreign Exchange Management Act of FEMA 1999 becomes the most important area which we should be aware of. And once you do an audit for a branch, which is basically handling forex transaction, you will suddenly realize that you have understood a lot of, you need to understand, and while doing that practical application of that knowledge, you will understand a lot of things about FEMA, which is in high demand in the corporate world. Then the rule regulation which are issued under FEMA, then there are RBI guidelines, then there is a Foreign Exchange Dealers Association of India, FIDI, we say. They also provide certain guidelines for FEMA. Then sale purchase of FEMA would be important under the FEMA guidelines. Sale purchase of foreign currency, traveler's check, travel card. So this is also important in case any of you is going outside India for leisure travel or for education, basically, or for other reasons like medical, etc. So there it becomes important. So we have a scheme called as a liberalized remittance scheme, which is there, where there is a limit of USD 250,000 per person per financial year, which can be utilized for such purposes. And then we have concept of purchase of foreign currency. Then I'm only introducing it because we have a limited time frame here. This is, I think, very important, which is what we call as special accounts under FEMA. This area, though, is under FEMA, but is applicable to even C category branches. So C category branches can also open these special accounts, which is otherwise under FEMA. So this is one area of Forex which is even applicable to C category branches, that they are able to operate these special accounts, which are basically NRE and NRO. So NRE is basically non-resident external account, NRE accounts. And we have a concept of an NRO account. So what is NRO and NRE, and what is the difference between the two, just to make you understand. So NRO accounts are basically, if you are a resident, you open a normal savings account or a current account or a fixed deposit or a recurring deposit. NRO accounts are basically for non-residents. So non-resident ordinary account. So it is equivalent to your resident accounts only, but it is meant for non-residents. So in case you are a resident, but under FEMA, you get converted into a non-resident status, right? So these normal savings account can be converted into NRO account, can be redesignated as an NRO. So what is a normal account for a resident is, for a non-resident, the normal account is NRE. NRE, on the other hand, is a special account, is meant for customers who are basically non-resident again, but is sending money from abroad. Basically, foreign sources are there. So maybe he's working abroad, he has some savings abroad, he can transfer that money to India, put it into NRE account. The advantage of NRE account is that the money do not result into any taxation. So any interest earned on this NRE account, there is no taxation under the Indian Income Tax Act over the same. And whatever money he has put into his NRE account, he can repatriate that money outside India at any point of time without any limits. So that is the advantage of an NRE account. Then we have FCNR accounts, which are basically, let me bring. So this is FCNR account. So FCNR is basically foreign currency non-resident deposit account. So again, it is meant for non-resident. NRO, NRE both are in Indian rupees only, denominated in Indian rupees. FCNR deposit is in foreign currency. So it is in form of a fixed deposit only, right? So it is a foreign currency fixed deposit account. Okay, so very important, FCNRB. And then we have SNRR account, which are basically meant for non-resident, which have business operations in India. For some specific project, they can open SNRR account. Then we have EEFC account. These are for residents in India, companies in India which have foreign exchange earnings. So these EEFC accounts are in form of a current account, but denominated in a foreign currency. Okay. Then we have resident foreign currency account. These are for resident again. Accounts which are denominated in foreign currency. Then we have diamond dollar accounts. These are for firms, etc., who are exporting these jewelry, etc. So we have diamond dollar account. And then we have a special account called as the FCRA account, foreign currency, foreign contribution regulation. So it's a different act altogether. But these are accounts maintained at the branches. So we need to be aware of the provisions of the Foreign Contribution Regulation Act and the purpose of the act and what is the responsibility of the bank under this act. Then we have, of course, transactions like imports, exports, and transactions like foreign direct investment, where investment is made in India by non-residents or foreign companies, or overseas direct investment, where Indian companies are investing abroad, or where external commercial borrowing, where loans have been obtained from abroad. So there are a lot of areas under Forex. And you should be, if you get the opportunity, I would say that you should try and get that opportunity to work in this area, which would be a real enhancement in your understanding and knowledge in the area. So thank you so much for whatever I wanted to convey. And now any questions which we have, because we are running short on time.
Sure, sir. Thanks a lot for taking such a wonderful questionnaire round also, and we are having a questionnaire round, and it's great topic discussion which you had with the students. Now our first question is from Delhi. The question is, what to do if branch management does not agree to our query?
Right. So this is generally an issue which comes that we point out an issue and the bank management or the branch manager does not seem to agree with whatever we have pointed out. In that case, I think the most important point as a student would be to bring it to your knowledge of your principal, discuss with him, tell him your viewpoint, understand, and then maybe he can take it up with the branch management. In case still the differences does not disappear and you have a difference of opinion, then of course the auditor has a right to bring it to his audit report, his viewpoint, and in case he feels it is important, he may bring the viewpoint of the branch also through his audit report. But he has an absolute right to bring out whatever issues he feels are applicable to the bank and which he needs to bring to the knowledge of the senior management.
Yeah, student must have learned this. The other question is how to handle cases where we can see the password sharing.
Okay, so that's a very, very relevant question, especially in the this era of digital working. So now, as we were discussing on maker-checker concept, in case of bank, it becomes a very, very cardinal rule that to prevent frauds, there is a concept that two officers should be involved with any transaction. Now, when this we put this rule in working in case of a CBS system, it is basically maker and checker in the CBS system. And how do we check for maker and checker is that one person would do the transaction, other would authorize the transaction. Now, if password sharing is happening there, then what would happen is that this rule would fail because a single person, if he is aware of the password, both the officers can do a transaction and can authorize the transaction himself, which would actually result into a lot of risk for the bank. Now, we see sometimes that practically, though it is strictly not allowed in any bank, that password sharing might be happening at the branches. So if you notice that, the best way is first to bring to the attention of the bank manager that you have noticed such issues. In case the bank manager does not give a satisfactory reply, then of course you have every right as an auditor to bring it to the notice of the senior management. And there can be tools also, which I can tell you, which can actually document that these passwords have been shared. Is that sometimes what happens is when the password sharing happens, the person may be on leave, but the password would have been used because the password is already in the knowledge of some other officer. So we have done this, that we have actually took out the attendance register, find out the day when the officer was on leave, and have seen from the system whether his username was used for doing any transaction or verifying any transaction. And in case you are able to trace any such case, then it can be a document for you to give to the management that password sharing is happening. Let me be very clear, sir. If password sharing you observe at the branches, then there is a very high likelihood that a fraud is going to happen at your branches, because ultimately this would result into the breakage of the cardinal rule of make and check. So you should be very careful.
Right, true. The other question is from the southern side. Whether playing games, etc. on the internet surfing on the branch computer is acceptable by the branch staff?
So again, this is something which is of a very recent ruling. This kind of risk have arisen. So I can tell you one of the cases where, in case of one of the public sector bank, they lost a few 100 crore rupees just because some officer of the bank decided to download some kind of a software from the internet and decided to use that software for the purpose of doing passing on his say free time. That what happened that through that downloading of that unauthorized software like games etc. is that the system was compromised, and because all systems are interlinked in a CBS system, some hacker was able to control the system of the bank, use that compromised system for the purpose of transferring more than 100 crores outside the banking system. So this is one of the cases. Similar in case of emails. Now you see a lot of times they have access to external emails. So in one of the banks, what happened was this external email somebody sent, and when they click open that email, it was purported to have been issued from the Reserve Bank of India. When they clicked on that email, a Trojan horse was installed on the system of the bank, and through which the whole system, the whole CBS system was compromised, and that compromised system was used by the hacker for the purpose of transferring of the money from the accounts of the bank to his own personal account. So that can be a very, very serious issue. Though seems to be an innocuous issue, it does not make any difference. Yeah, he's playing it on his free time. But when it is installed on the computer system of the bank, can result into a disaster for the bank.
Definitely, you're true. That's why so much things happen. Other one is whether I can report on any other issues which is not specifically mentioned in the concurrent audit report format.
Yeah, so basically, as I told in the beginning itself, as a concurrent auditor, your responsibility does not end on the reporting format. So every bank would have some kind of a defined reporting format, but every bank would, for that reason itself, would include a clause wherein they would say any other point where the auditor wants to bring to the notice of the management. The reason is that there can be so many other issues which you may notice as a branch auditor, as a concurrent auditor, which has not been specifically covered in the report itself. So any issue which you feel would affect the functioning of the bank, would result into some kind of compromise on the internal system of the bank, would result into some kind of misuse of the resources of the bank, or customer service issues, any issues which affects the functioning of the branch, and which is material, which is important to bring to the notice of the management, can be brought out through your concurrent audit report.
There is one more question from Mr. Jay from Delhi. He's saying if concurrent audit is same as internal audit, are they both equal?
No. So internal audit and concurrent audit, the basic difference is, as we discussed in the earlier phase, and as Mr. Puntal also discussed, it is the periodicity of the audit, or the time lag between doing a transaction and the verification of the transaction. So internal audit would definitely happen. It happens on a periodic basis, like a year or 1.5 years or 2 years. So from the point of time a transaction happens and the point of time the verification happens, the difference would be like 1 year or 2 years. So the time lag is very, very substantial. In case of concurrent audit, the biggest advantage the bank has is the reduced time lag between the doing a transaction and the verification of the transaction. And of course, because the transaction is happening on a concurrent basis and the concurrent auditor is sitting from month to month, he can do a much more deeper verification of the transaction when compared to an internal auditor, which may visit for say 10 days or 15 days, where he can only do a very, very limited kind of a checking of the transaction. So where the concurrent audit can really help the bank management in reducing their risk, the operational risk in the functioning of the branches.
There is a last question. How to handle the cases where we see that branch is running counterfeit notes detected by them?
So this is again when we discuss about the issue of the counterfeit note. I told you specifically that the RBI guidelines does not permit any destruction of the counterfeit notes, and they require that there is a process which is specifically defined that they have to stamp that counterfeit note, mark it in the register, and issue a receipt to the customer. Any such violation of the process needs to be specifically brought to the attention of the senior management and is also viewed very, very seriously by the RBI, considering the nature of the transaction itself. And because it is a counterfeit news or counterfeit note itself is a punishable offense under IPC, destruction of counterfeit note would become a punishable offense. Destruction of a transaction, of a illegal transaction, evidence of a illegal transaction, and it would invite some kind of a penal consequence under the Indian Penal Code. So must be specifically brought to the attention of the manager.
So these are the all questions, sir. Thank you for sparing your valuable time for the students. And I thank Lokesh Gupta ji plus Kuntal Shah ji for taking so much of pain for the student. And these modules are also available on the YouTube channel on the ICI. This is for the students and plus on our DLH platform under SSCB. So you have to log in on to the DLH platform and then you have to go to SSCB. There you can find the practical training modules and you can download the PPTs also. All the PPTs with the faculty, our senior session speakers are sharing with you students are available on the same. So thank you, sir, for sharing such a valuable insight about the topic on the concurrent audit. It is a vast knowledge which you gave to the students. And students are also thanked you also for giving such an insight about the topic, sir. Thank you. Thank you, sir.